afternoon, or good morning, everyone. I hope you can hear me okay. Uh, right now, market's getting hit and we were short, and I'm going to show you why we were short. And I want to show you just relative strength, relative weakness because it works. So, just to let you know. So, what are we talking about? So, number one, I do box charts Sunday night, Tuesday night, and Thursday night on Chart Patterns Mastery. And I just want you to realize these are the things I obsessed about is the 50 moving average. In fact, let me see. I was hoping I could show you the box charts. But I'll just show you this. So all we're doing in here is we're showing the weekly 50 moving average. And we're going through all the different indexes that are over it or under it. As you see, the ES. So I do bull flags, bear flags, and I'm doing a class on bearish patterns. And this sets up great because there are a tremendous amount of indexes, as you see, under the 50, even foreign markets under the 50. So let me go and share it. It was sharing, and it shows it sharing. And I'll share again. So I hope you can see it now. If I can get it to work. Yes. So what are we doing in here? So number one, we're playing that theory. The theory that these go to the moving average. The Dow is under it. The SPX is finally at it. And the worst is the NDX. We've been obsessing about those arrows on foreign markets, on US markets, because there's so many that are at it. Usually bearish things just at the minimum go to the 50. Now, I know that everybody's been posting this, and I'll post it as well. And I'll show you what we're talking about. Is talking about historical tendencies. And totally understand that. And I'll share it with you. So here's your historical tendencies. So on how the NASDAQ rallies from its bottom in October into November, December. There. So I hope it's working. So the whole idea in here is that historical tendencies. So just keep that in mind. But the problem with that is number one, all year I've seen that not work, whether it's a pit bull low on the Friday before expiration. You just can't go on that stuff. But the bigger deal is from where and from when. So just keep that in mind. And they're from where and from when. So that's one thing. Number two in there is also about the bond market. So most of these, the bond market was doing this. A bond market started going up when I started in the business, 1982. And sure enough, the markets went up. The difference is this year, the bond market's broken a 42-year uptrend. Good for me doing a short selling class. But let me share this with you. Let me see how to do it. Let's see if copy and paste works. Yes, that does not mean you're going up today. So that's number one. Number two is, like I said, the bond market getting destroyed like this. It's just one day up. So just keep in mind the probability of these going to their 50 moving average, even if that looks good right here on a weekly, the probability of this breaking up and not down goes down dramatically if the bond market's getting destroyed. So that's number one. So I wouldn't, if you want to pick a bottom, you got to wait until you see like a bull flag followed by a follow through. So let's see if there's one in the bonds. Well, it's getting there. The problem with this is all the overhead resistance. So you're sort of getting there, sort of, kind of. I wouldn't call that like a massive bottom. I'm telling you, if the market crashes, yeah, it'll probably go up. So just keep that in mind. So that's number one, is where I think ultimately it's going. Heck, with the way that historical, this might take till next year. So there are a lot of times when the market's rallied, and I'll go and take this on Thinkorswim. A lot of times the markets are rallied even when the bond market's gotten hit, only to go down in January. So you'll see. I mean, it's just, I'm not making this up. This is just the way it is. So you go to last year, yep, it rallied until January. How about the year before? Bond market was getting trashed. Guess what? It rallied in October. Till when? The end of December. So if this does rally for some amazing reason and the bond market doesn't have a massive rally, darn right in January, I think this is going down. So that's number one. Number two is I wanted to go over feel. So, and I want to show you what I mean by feel. And we posted this in the Chart Patterns Mastery. So if you see the bond market, it doesn't take much for this market with geopolitical risk to go down. I just want to make that clear. So when you see down here, we can make TLT, we can make bonds, whatever we want to make in here. Now, don't get me wrong. We could have a rally today because bonds are up. Don't get me wrong. Definitely you could have that. But I wanted to show you this. So right here, this was in our Chart Patterns Mastery. In fact, give me a second. So the way I'm looking at it in here is this. Number one, you saw a lot of the leading NASDAQ, Dow stocks and ES stocks looking like garbage on the opening. So you do it on relative strength and weakness, and this is why we got bearish in the first place. So you watch the SPX on the opening, right here. And you're watching the bond market do this on the left. So the whole theory was if that stopped going up and this was already forming a bear flag, then this was going to get crushed. So the bonds were only up 10, and that's all it took for this bear flag to work. That's all it took. So just keep that in mind. So a lot of times we look at feel. And then the other thing is, if you're watching feel and you're watching that, what's already going down before that breaks? Oh, that's the next part of the feel. So you go into, well, let's take Meta. And you're watching Meta here. So right here is about, let's say, 950. So what was Meta doing at 950? It was already down here. Now, this wasn't perfect, but this stock, look at this trend line. So that's another thing. I'm doing two things. I'm doing three things. I'm doing the Summit for Simpler next week in Orlando. Then I'm doing the Money Show, and then I'm doing a class on bear shorting. And the thing for the Money Show is determining support and resistance and trend lines. The more touches, the more important. Now, I'd rather have it horizontal. So that way when it breaks, but you see, this isn't a lot of support. It's a lot of touches, not a lot of support. And that was it. So, and that's all it took. But the whole point is that when the bond stopped going up a lot or fast, the slope of the bond market, that's all it took for the SPX to break down, not up. So that's number one. Number two, I can't stress enough on how many analysts are failed traders. I know that stinks to say that. I've been doing it 42 years, though. I worked with a lot of them. The key is I can't tell you how many overnight said that WAL, yeah, they had good earnings, it's going up. WAL is a regional bank. The worse the bond market is, the worse for their portfolio. So I don't care what they said. We were coming in short. I don't care what they said. Is see that chart? See how it opened up? Well, go to some of the other regional banks and look how they open up. There you go. They opened up. So there were a number of them that opened up on earnings. Even Schwab, the mighty Schwab, opened up on earnings. And I'm just telling you, if Schwab can't hold its gains, why should WAL? So that's why we were shorted. So, keep that in mind. And that's how we're trying to play these things. So definitely companion stocks, definitely support and resistance. And the other thing is definitely watching a group of stocks like Meta. Yeah, we shorted in here and got stopped. So, when I'm not at the desk, I'm trading 10 shares. I lost $5. $5. That's it. Because I'm not there. If I'm not there, I trade tiny. I just want you to know that I trade tiny. So if I'm not at the desk because we had a house flood, I have contractors here, I have insurance agents, I'm doing 3 banks of slides. I'm going to trade tiny, but on the opening, when I was able to devote myself, we kicked butt. So just keep that in mind. So that's one thing. But relative strength and weakness matters. Also, longer term, I think those moving averages matter in the major indexes. Do I think they matter now? Not necessarily because of historical tendencies. Do I think eventually they go there? Yeah. The problem is right now, everybody thinks the NASDAQ is going to hold up because of AI. All because of AI. Totally understand where they're coming from, but if the other indexes go down enough, that'll go here. That's just the way it's been for the internet boom in the 1999, 2000. It worked. It just took some time. It's all herd psychology. In the meantime, one of the biggest ones, NVIDIA, has only sold off 100 points. So I think you see the writing on the wall. If these break, then I think the whole NDX is going to go to here. So the first thing is overall market perspective. So that's the way I was leaning. That's the way I was leaning because of that. So just keep that in mind. And like I said, the more times you can connect the trend line, the more important. Whether it's a 1 minute, 30 minute, whatever your time frame. Look at this. Even on the upside, don't think I'm only looking at bearish, but with bonds getting crashed, yeah, I'm mostly looking at bearish, unless it's like gold or something. So just keep that in mind. So that's number one. Number two is a lot of people might say, well, in 1990, when we invaded, let's say, Iraq or Kuwait, prior to that, yeah, when Iraq went into Kuwait, markets got hit. When we invaded, markets went up. So markets like wars overall, eventually, because it helps economies. It doesn't make sense. It's not right, but that's the way it is. So once we invaded, the markets went straight up. So geopolitical does matter, except this time it's different. Number one, the bond market is straight down. So there's an alternative to your money, which means that any bad news is going to affect the ES more and the NASDAQ more. Any bad news is going to affect it more because there's safety to be able to go to. Number two is it's not a one-off war. It could involve a lot of countries. So there's a ton of uncertainty. All you have to do is look at gold, which brings me to the next thing. You got to know what to key off of. So if bonds are up, great. But if gold is up, that's a sign of instability. And when gold was only up this, it wasn't affecting the markets a lot. When it's up this much, people get real nervous. So just keep that in mind. And that's why over the weekend, we'll see how much this rallies in the next hour or two if the bonds matter. But if I see this gold stay up this much, we're going to play things at the end of the day again like we did yesterday. So, I mean, that's what we want to do. So that's where we are. And so what else am I doing? Well, the things that made the market go down on the opening, which was banks, are holding up now, sort of. So that's the next thing. ATR trailing stop. So if it's over the ATR trailing stop, it's green. I have a ton of charts. That's why I have that. I don't mean the green line. I mean the green chart. If it's under it, it turns red. The reason I have that is I'm watching a ton of stocks. So if I see just, well, not this as much as I had up software service, but if you see some chips start to bounce, well, I don't have to look at them. I already know they're bouncing because they're over their ATR trailing stop. How about the economically sensitive? They're getting trashed now. So it really helps visual wise to have this. So just keep that in mind. But I'll tell you right now, I'm watching this. Here we go again. The bond market's been rallying. The ES finally over the ATR trailing stop a teeny bit. Look how much you can make on the way down, which brings me to another thing. This is from me doing it for 40 years, using the ATR trailing stop. You can't be literal like every time it crosses, that's it. So let me take this chart and I'll show you. A lot of times, the first time it crosses after a protracted down move, it creates an overbought condition, as you see down here. So you got to see how it works off the overbought condition. Does it work it off as a bull flag? Overbought condition, how to work it off? Nah, not doing much. Overbought now, little bull flag. So it really depends on how it works it off. And also patterns. So I just can't stress enough combining all of these together with patterns. So very important, real important. I mean, that's the way I look at it. So just to let you know, I posted about shorting this tiny right in here, right here. So now you might say, why'd you do it if it's over the ATR trailing stop? Well, the ES was getting trashed, but our stop was at the top of the wicks. We lost $2. We shorted 10 shares. That was it. So we lost $1, $2. That's it. So, I mean, that's a beautiful thing when you only lose $2. So that's what we mean about support and resistance. Now, should I have shorted it? No. Obviously, I shouldn't have shorted if it was over the ATR trailing stop, but I was watching this get trashed. So I was going for the highest beta. But that goes with the feel again. When the ES was going down, making new lows, this wasn't. So that's why I did 10 shares. I wasn't going to be in front of the machine. Oh, in front of the desk. So just keep that in mind. So, I mean, that's how we were doing it, which means now what do you do? Well, I think you see that this worked off any kind of overbought as a little bullish pattern. You can see the little bullish pattern. Doesn't mean all day, but you see what's going on. That it tried to work off at least temporarily. Now, that's a 1 minute. So what did it do on a 5 minute? Is that anything to write home about? Or a 15 minute? No. In fact, they're starting to get overbought in a downtrend. So no way I'm chasing a rally in here. No way. So later, sure, if you see the bonds up like $2, that's different. if I see like a 5 or a 15 work off the overbought by forming a bull flag, that's different. If it does that, sure, it could be, it could go higher. So I'm not chasing rallies. I'm not shorting dips until proven otherwise. So just, in there. And I don't play a reversion. I don't play a reversion or a bounce. I'm deciding to play chart patterns. So I never play if it's too far from something, you buy it. It's got to be too far from something and form a consolidation pattern. So that's one thing. If it looks like it's in a big old bear market, I don't play a bounce at all, but I back away. But I don't play that kind of reversion thing. I play earnings reversion once. So about things going to unchanged prior to earnings. So like this yesterday. This was great. We did this one. Not today. I'm talking about yesterday. Oh, the stock got all the way up to here. So reversion trade, you're betting on it going back to unchanged, but you like to combine other factors. There you go, a trend line. So that's one we did. Right here is when Powell talked. We shorted there as well. And bought back here. Look quick, 70 cents. So that's when we'll play reversion trades. So reversion trades, just like now, if it's oversold, no, that's a good way to get hurt. So just because something's oversold doesn't mean it can't stay oversold. Look at this sucker. Yeah, you might say it's oversold, it's going to bounce, but right here, you also could say it was oversold. So it's all about how it works off an oversold condition. But usually you want to see some kind of bullish pattern, which means why I've never bought a bottom or sold the top. I just go on direction. So I try. When I try to do the other, I lose money. But I try to find definable trend lines, definable patterns, and heck, I'll look at correlation. So if WAL is getting toasted, then probably some of the other regional banks are going to get toasted. So definitely correlations. So, but for a reversion, I just don't play it unless I have more than a reason to reversion. Like this. Yeah, this got probably too far from something, but it also broke out of a rectangle. So you have more than one reason. So, but the reversion things I'll trade. But let me just tell you, Corey. So you have a lot of earnings next week, but none Monday morning. So if the whole market's going down, I'm not playing something to the upside. If the market's choppy, then and something, let's say it opens up here, but it opens at resistance, the overall market, not PAC W. I'm talking about the overall market, and it pulls up an earnings stock, then I have to look for a cross. Have to look for some kind of cross like there. And then I'll play the reversion. But there are two caveats. Number one, it has to get pulled up by the overall market. Number two, you need a choppy market. And number three, you need some kind of trend line. That's all. You need some kind of trend line. So right now, what do? Well, like I said, you're right about it reverting, but it was more the idea that you started to see it working off its overbought by forming some kind of bullish pattern. So, I mean, that's the way I looked at it. Doesn't mean you're out of the woods on the downside whatsoever. Not yet, at least. As you see, And Corey, I'm not picking on you. I mean, you're asking great questions. So here, we saw it get above the ATR trailing stop on a 1 minute. So you see the difference, I hope. Well, I say this to my wife all the time. She looks at chart patterns with me. She looks at my dojis all the time. But basically, you didn't have the structure when it got overbought. But this time you got the bull flag. So just keep that in mind. So we were talking about the bond market. So it comes down to the bond market every day has gone down. So the market's listened, but it was really because of bearish patterns, all technical and watching gold, all geopolitical risk. But it really comes down to I didn't really care as long as you saw that. So that was your pattern. So the other thing is definitely so many indexes not at their 50 moving average on a weekly yet. Now, and like I said, ZB, you're just picking bottoms without 3 reasons. Monthly chart, yeah, it's at support. Daily chart doesn't show you anything except it's oversold. Hourly chart, yeah, maybe it's forming a bottom. Like I said, I never pick bottoms, but now it's trying to form an inverse head and shoulders. No doubt about it. That's why it's so tough not to be able to buy here. But if you want this to start going up, you really need to see a reversal wick. That one didn't work. Why is this one working? Don't know yet. All I know is it's trying to form some kind of inverse head and shoulders. Right in here. Trying. So then the key is if it breaks there, where's it going? Well, it's got that 108.28. It's got to get over that. And then you still have this schmutz in here. But sure, it could try to go to 109. And the other thing, I just think with the geopolitical risk, you could get a flight to bonds, but there's another thing of why that hasn't helped. Yeah, there's a flight to Bitcoin. That's pathetic. So that Dow Jones Commodity Index, long bonds hate inflation. So if oil stays up or relatively up, it might not be up a lot today. Let's see. Yeah, it's up 84 and gold's up. Then the Dow Jones Commodity Index goes up, and that's a headwind against bonds. On the other hand, yeah, bonds are acting well today, no doubt about it. But it would be better if there was an hourly chart that looked real constructive. There's an hourly chart that looked pretty constructive, but darn right you missed the first point. So, but the problem with these is the resistance on the way up. All the way up. And the big problem is the monthly chart finally broke a 42-year uptrend. That's why I've been bearish on bonds for months and months, for years, for the last year and a half. But that has not affected the ES that much. If you put the ES up here or the SPX, it's up here. That's an accident waiting to happen, but it hasn't happened yet. So that's what I'm watching, which means it doesn't have to happen today. Overall, I think that's going to happen. ZB, I don't think it's a trade opportunity of the generation whatsoever. It's got a 42-year uptrend. It's broken. So just keep that in mind. I don't think it's a trade of the generation. Sure, it could have a percentage move, but the long term is still down till proven otherwise. Now, if I see the Dow Jones Commodity Index get pummeled, and get down to like here, yeah, I think bonds could have a big bounce. But overall, the bond market has had a gigantic rally for 40 years, and now it's broken. There you go. Now, that's only the 23 year, but that's a big deal. And here we go again, overbought, and it formed a bull flag. There's nothing in here that looks bad. If you get a big reversal candle, sure, maybe you could have a good rally, but I don't think it's a trade opportunity generation whatsoever. I think it could have a good bounce. Sure, it could have a bounce. And in answer to Corey's question, yeah, it's getting pretty far from moving averages. But if it's getting far from it, I have to see the reversal pattern for me to go massively long. So it's a good question, but I don't think it's time. Now, getting back to it though. So let's go back to this. If you see the bonds oversold at the trend line, that's a great opportunity. The Fed was still in QE. That's a whole different situation. There. So number one, you were at support. Number two, you were oversold. And number three, you had QE. And number four, you were at the trend line. And you were over the ATR trailing stop. 5 reasons. That's your opportunity of for a long time. That's 113 to 144. If you're a futures trader, you're retired. So definitely, there's a time and a place. Once it's broken all this, usually the rallies, yeah, you could have a good rally, a real good rally. But to me, the long-term direction is still not so hot. It means buying dips is not buying oversold isn't going to work as well as it did here. That's all I mean. And like I said, you're probably going to get waves today. The waves are going to be like this, where you get an overbought, then you get another rally, probably on negative divergence of the MACD, and you just can't buy rallies in this market. Now, if I saw the bonds up 116, that's a whole different situation, but I'm not. So at the moment, here we go again. The bonds are rallying. The market tried to go up. The bonds are selling off. Advanced decline going down. Now you look for what refused to go up, because if you're wrong, you're probably not going to lose a lot. If you're right and this goes to a new low, yeah, you'll do great. Yeah, Mester talking. I really like Loretta Mester. There are a number of them I like. I'm used to listening to her on TV and being able to understand what she's saying. So maybe we go up on what she says. No doubt about it. And then it comes down to, well, if you sell off, what's acting the best? The problem I'm having is that chart right here, and a 5-minute chart getting overbought. That's where the MACD comes in. In fact, look at this on a monthly on the bonds. Look at that overbought. Then you look for your trigger. So, like I said, I'm not looking right now. A lot of the move has been done. So I'm not going near the markets in here other than if I see consolidation patterns, because on a weekly, it's getting to where I wanted it. right? All these prior tops, now it's support, which is now. Oh, I were close. And the moving average. Do I think it has to stop there? Well, heck, it didn't here. So, but for now, yeah, it might stop right here. All I mean is the risk reward isn't there at the moment on the downside. That's all I mean. So, I mean, that's the way I look at it. So now, like you said, Corey, yeah, you're right near the 200 or like weekly 50. I've been using the weekly 50. It just seems to be working. But you're right. I guess that's the 250. So let's go to your 200. Because I think that's valid, no doubt about it. I'll go to Trading View. So we'll go and put the 200. So just to let you know, so in the money show, I'm going over support and resistance. In the Summit for Simpler, which I'm hoping you show up. I mean, not just you, everybody, just to meet us in person, and so we can associate the chat with the faces. So it'd be pretty exciting. I'm going over consolidation patterns. But the idea in here is, yeah, look what's going on. So the second bond stopped going up, this went down. But let's go back into that 200 like you were mentioning. I'm going to take off everything. Maybe shield your eyes here. Obviously, that's pretty far down. And in answer to your question about, is this the opportunity of a lifetime? Look at that. It got too far away, but that's not that much of a rally. It's some, but not a lot. But believe it or not, the better rally was right there. Not a lot, but the direction was known. That's about 5 points. And there were little ones within that. But let's go back to the moving averages like you mentioned. So there's the 200. That's the weekly. Yeah. So, I theoretically, the 50 on a weekly, 5 days is 250, but that's close enough. NDX, way above it. So YM, below it. The transports, we know that's below it. So now I'm probably going to do bullish ideas in the transports down here. The problem with that is you really got to wait for the reversal pattern. So here's a reversal pattern for you. Here is a little reversal. So let's just take December 27th. So I got to wait for those. But you're right. You're at the 50. The only problem is geopolitical stuff could get you to the 250. So let's put up the 250. That's the weekly 50. Not the transport. You see that 200 and the 250. How about the SPX? At the 200, like you said, and there's the 250. Now, I don't use a 250 for a daily. I use a 50 on a weekly. But same kind of idea. So transport's under, Dow under everything. SPX at it, like you mentioned. NDX way over it. So what's that mean to me? Well, if we go on correlations, I got to think the Apples of the world are going to have lousy earnings. The Metas of the world are going to go down to here. So probably, I mean, it doesn't work perfect. But if Netflix is under it and it's a low bar for earnings, Apple went up. So you have JB Hunt was over it, way over it. And it went down. I'm not saying, I mean, that's being a commentator, but I'm just saying, hindsight commentator, that I'm going to try to lean on the Metas of the world, the Googles of the world, the Amazons of the world as short, like trying to do spreads under the market if they're cheap enough. That's all I mean. Now, the thing about gold, and Corey, we've talked about not you, but on the chart patterns mastery about this, and it's been a wonderful tell, is the commitment of traders. This comes out every Friday afternoon. It doesn't work for everything, but it works for gold. So if you see the commitment of traders, this green line, and making it less short, that's a buy signal. So I just can't tell you how many times that's worked. Here, 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 there, and there. And that's only on a daily. But when they get less short, that's real bullish. And you can sign up for that. It's just the CFTC. And it works. And like I said, I am not long. I cannot be long when you got too much geopolitical stuff and the bonds just aren't up enough to make a difference. And here we go again with relative strength or weakness. So I'm going to go and show you. So there's the SPX. On the left is the bonds. Well, the 30-year bond. You can take TLT also. So the whole theory, well, when I day trade, it's that if this is trying to take up the market or trying, and this goes up and this starts going down, then you look for the reversal pattern. And to me, a reversal pattern is when a red candle takes back a green. Well, it could be a pattern. I mean, a real pattern like here. But when I'm trading intraday and you get those little pops, you got to wait for just the big ones, the big candles. You got to look for the red to take back half a green. At least that's the way I do it. But that's what I look for. So believe it or not, if you're seeing this go up and you're already seeing some red candle taken back, and it's got to be big. That's the biggest mistake I see is messing around with tiny little candles. You got to take the big ones. So let's just go and take Meta. Did that have a little candle? No, that's like a non-event. You can't really tell a thing. Maybe a big green candle at support. Yeah, maybe that. But that's about it for now. So I just don't see the play on the long side. Like I said, if I see these bonds up 116, well, let's say if they're only up 15, and I see the ES start to form a bull flag, and out of nowhere this is up at 116, sure, that'd be a whole different situation. But we don't see that. about the best thing going for the ES is it's near that 200 you talked about. That's about it. And besides that, I don't have a lot on. So do I? Well, I'll show you. Corey here and uh, everybody, Chaz, let me just show you. I am not shorting here either. So you're sort of in this purgatory of that support here, but 15-minute is going to get overbought, believe it or not. So when I see that after this kind of plummet, and you see where I want to short, it's not there, but there's your resistance. But here's your support. So when it gets like that, I just back away. Yeah, here you go. But it was just there 2 minutes ago. Now, I do have another idea for you. Let's say the bonds are up 116. It doesn't hurt to mess around with the VXX. Let's say you get bullish. I'm not bullish. I'm just saying if you did have, let's say Monday. Let's say Monday the market opens down slightly, but nothing terrible happens, which I hope nothing terrible happens. You can go and buy some VIX put spreads. The VIX is designed to make you lose money. It has to do with the spread between the near month and the next month. And if you look, go and check out where the VIX is on a monthly. Look at that. So it's designed to make you lose money, which means it's designed to go down. So if the market has any kind of torque to the upside, you could see this back down to here. The problem is at 24, is there any spread to do for next week? Nah, not really. Like I like to do butterflies if the VIX expected move is pretty high. But see that? When I look at a spread, a 3-point wide spread for next Friday, where the most you can make is $3 and it's $1.30. So the most you can make is $1.69. I can't do it. It's a terrible risk reward. So it probably will work, but I'm never going to do it. So, keep that in mind. I will buy puts in the VXX because that's designed to make you lose money. So, which means it's designed to go down. Look at that today. The ES is down 38 and it's down. So, in fact, I'll just show you next to it. Here you go. Here's the VIX today. Here's the ES or NASDAQ on the right on a 1-minute chart. So, what happened? This stopped going down fast. And the second it stopped going down fast, this got nailed fast. So I love trading VIX stuff, but I'd rather play it on a Friday at the very end of the day. If you can get like the 26.5 puts, if this rallies, sometimes you get some big moves. So in there. Now the VIX itself, look how fast it goes down, but I'm not going near the VIX I really want to see a washout or a spike. This is really gradual. It is overbought, but I'm not going near the VIX. I'm not going near anything in here yet. So that's where I am. And Lorna, I only buy puts in the XSP. No, just kidding. Just kidding. So, but I play it on the long side too, which brings me to this. So for all of you in the essentials room, so I play the SPX a lot, but if you're scared to trade it, which I don't blame you, they're pretty expensive and you could get hurt if you're wrong. A lot of times we play this. It's a 10th of the SPX. And we'll go and play like spreads in there. That's not a bad way to play it either. So that way you don't have to worry about being dead wrong. That's one way. And they're pretty liquid now ever since I mentioned them. Oh, right. You use VIX. VXX, right? Yeah, VIX futures. Yeah, you can do that too. No doubt. But I'm telling you right now, you're seeing this try to build a bottom. So that's another thing when I do slideshow. You don't want to short when it's at support. You might not want to short here either because the support is too close. So let me show you. Let me show you what we're talking about here. So XPXL and XPXS, you could do that too. The one I'm talking about is more, it's cash settled, where SPY isn't. So the other thing, all of these. There's SPXL. So how about the other one? There you go. Believe it or not, they've both gone down. How is that even possible? It has to do with slippage. So this, you would have lost 50%. This, you would have lost 50%. So if you buy both, you still lose money. Now, short term, don't get me wrong. Sure, they're fantastic products short term. Short term, sure. Long term, no. So that's how I look at it. But it's a good question. So, and let me, XSP, I'll show you one. For today, I didn't do, I'm just showing you an example of something that's less pain. This is a 30-point wide on the SPX. There's no way I'd pay 12 bucks, even if I think I'm right. So earlier, when the market was getting tanked, this was 78 cents. This was 78 cents when it was right here, believe it or not, because the volatility was so high on the opening. You saw the VXX got nailed. Yep, so this went up. So I'm just telling you, that's one way to play it. So when the VIX goes down, the middle strike gets hit, or it doesn't go up as fast. So that's how I like to play it. Now, I will show you a couple of other things because it's interesting. I don't have a lot of time, but I'll show you anyway. So yesterday we played the SPX at the end of the day. I want to show you the difference. So here's the SPX at the end of the day yesterday. It closes officially at 4 o'clock. So unfortunately, we were long the 4280 puts, We were long at Butterfly. We doubled our money. But see that? 1 minute after the close, it was here. I mean, the ES. 1 minute, or it would have cleaned up. On the other hand, the SPY puts trade till 4:15. Now, it doesn't look like they do when you do a chart. I'll show you. It's really interesting. So if you're really bearish on the close, really bearish, see that? That looks like that. So you're talking about, 426 and a half. But it trades another 15 minutes. So I thought I'd show you this because I'm just talking about what I should have done. So we're going to put the SPY on the left. And we're going to put it 24 hour. Like I said, the normal stop at the chart stops at 4. But I got to show you this because, like I said, I beat myself up all the time about what I should have done for me or my subscribers. There. So right here, it closed right here. 420. Well, you could add it here. So it closed 426.50. Well, 426.40. But look what happened right after that. This is 8 minutes later. 425.50. It went down a point. Now, the problem is the options keep a lot of premium. So I wish I had more time. I show you what the options did. Let me see if I have enough time. We're going back to yesterday, the 19th. We already did I showed this earlier. You can actually chart it. Remember, that's the problem. That right there, is that from 4 or is that from 4:15? Well, let's go see. I think you see it wasn't from, it was from 4:15, but look what the 427 puts did after 4 o'clock Eastern. Look at that. 43 cents to $1.40. So now what's the caveat? The caveat is you want to see the SPX rally right near the close so you can buy these cheap, which means like 38 cents. So you're risking $38. So if you get a little short covering rally right before the close, heck yeah, you could go and buy some of those. You see what happened to them. You don't want to buy them too early. So pretty cool. I just thought I'd show you that. These are all products we trade, and I definitely go to hindsight to see if I could have done something better. So streaming room, take care. I'm